Very excited to have our panelists here today. The reason I choose and asked to moderate this panel is because it's a topic that has really interested me ever since it launched. I really do believe in the future of digital assets, cryptocurrency. Anybody here that's kind of like anti-crypto, that's just here to listen in and challenge their perspective? Anybody here? Just come on, don't be afraid if you're like not believing in the future. All right. Excellent, but once again, I mentioned that I've been with the company for 8 years because when I came into the company, it was something that we never did panel discussions on. It was something that was relatively new. It was before the bull market in this asset class, and it's just been interesting to watch it change and transform. So really happy to have you here with us today. We're going to go down the line just with quick introductions, your name, who you represent, and why you're on this panel here today. We'll start with Lawrence.
Well, thank you. I appreciate the invite. I am an entrepreneur, actually, in crypto and fintech. I've been an investor for about 15 years or so personally, and also run an angel investment organization called Princeton Alumni Angels. And since we formed it in 2017, we've grown to over 300 active investors and about 1,500 people in our broader community. Part of the reason that I was invited today is that I've worked in digital assets and crypto since 2015, which makes me a very, very old head in that particular asset class. And so I've built several companies in the space, as well as made a number of investments over the years, and advise a number of firms on growth strategy, product and growth strategy as well. So I have a bit of a full circle view of the industry, both as an entrepreneur and an investor in it.
Fantastic. Thank you, Lawrence.
Good afternoon, everyone. My name is Jorge Cortez. I just came from Miami, Florida. I've been developing the technology ecosystem there since 2006. By 2013, I was creating co-working spaces across Miami-Dade County. I was advisor for the Blockchain Center in downtown Miami, and I'm currently co-founder of Beat Basel, the ecosystem builder in Miami, focus on blockchain Web3 for the creative industries, art, music, film, design, fashion, and I'll be telling you more details about it later.
Fantastic. Thank you, Jorge.
Good afternoon, everyone. Can I have a show of hand of who actually owns a little bit of crypto, even if it's like $100 worth? That's not bad. That's not bad. Good. I'm an investor. I was always into investing. I started my career in technology, but always on the side. I was focused on investing. Started with stock market, real estate, and then 2017, I read an article, Mark Cuban turns bullish on Bitcoin. Reached out to my network asking who here has heard of Bitcoin. Only one person replied, and that was enough. I sat with him, learned about it, realized there's a lot of potential to make outsized return here. Gave my time, invested some money, and then by 2021, 2022, was lucky enough to financially retire. So I left my job and now become a full-time investor, thanks to Bitcoin and crypto. What I'm doing now for the last few years is I do angel investing, which is not just in crypto, but outside of crypto as well. I do a lot of advisory roles. I'm advising a few crypto companies, non-crypto companies. I am starting a movie production house in India, which is, we have a movie going on floor in November. I am planning to launch my own crypto hedge fund sometime end of next year. Not raising any capital right now for that. And starting to get into a multifamily office in a couple of years. And a full disclaimer, because this is a crypto panel, even though I'm going to talk about crypto and Bitcoin, I don't believe it's be-all and end-all. I don't believe that Bitcoin is the ultimate truth. I love it. It's great. I just want people who are not invested in crypto just have an open mind. I understand when you hear Bitcoin, you hear word scam, but just have an open mind for the next 30 minutes if you can. You'll probably learn something from here. And it's not our objective here is not that tomorrow morning you're gonna go buy Bitcoin because we were talking about it. It's just this panel is probably gonna help plant a seed in your head. I'm hoping in 3, 6, 9 months when your RIA investor come along and talk to you, you'll be like, oh yeah, I heard about it. There were guys who were talking about it. I'm ready for it. So thank you.
Fantastic. Thank you. And yeah, I definitely want to touch on the geopolitical aspect of cryptocurrency in a bit. I think it's an important aspect, right? Like you said, it's not the be-all, end-all, but I think that geopolitical aspect is what's going to really determine that. But let's first talk about investment allocations. What type of, and we'll start with Lawrence, what type of investor allocations are you focused on? You were, and if you can expand a little bit, you said you were a crypto, digital asset entrepreneur, a little bit on those businesses, because I'm assuming that kind of influences your allocation strategy. And what do you, with so many projects out there, so many, from everything from blockchain projects, cybersecurity, cryptocurrencies, altcoins, NFTs, right? All these events, right? Art. What are you looking at right now?
And that's a great question. It's a great place to start. I also always try to bring back talk about digital assets to what people understand. So thinking about it as the traditional asset classes. How many people here are invested in large cap public stocks? Most hands are going to go up. How many people here are invested in penny stocks? If you're of a certain vintage, you think of the old pinks and bullies, pink sheets and bulletin boards, right? A lot fewer hands. How many people are invested in art? And think about it as an investment as opposed to simply for pleasure. Probably a few hands, I see one or two hands out there. Digital assets are very similar. There's a range of ways in which you can get exposure to the asset class. Thinking about enabling technology, so blockchains and some of that we call them L1s, the level ones, things that enable other projects to be built on top of them. There are NFT projects, non-fungible token projects, which again, the equivalent would be something, or the analogy in a traditional world would be something like investing in art. There are very long tail, at this point, tens of thousands of instruments. The long tail ones don't have a whole lot of market cap. They don't have a lot of trade, and very similar to say pinks and bullies or penny stocks, if you will. So you really want to just understand the asset class overall. It doesn't take a deep understanding of all of it, but enough to say, I understand where this particular instrument plays and what type of instrument it is and the risk profile of this particular instrument relative to other digital assets and relative to other asset classes. So, coming back full circle to where I invest, I spend a lot of time where I do work. I've built, most recent company that I built in digital assets was a company that provided treasury management services for CFOs that were transacting with digital assets. And so I spent a lot of time investing in enabling technology. So what are the firms that are building tech, grounded in Web3, grounded in typically blockchain or other type of tokenomics, that allow either traditional businesses or other Web3 businesses to expand their business, to grow their business, to more easily transact. I spent a lot of time there, and I think it's the thing that's going to enable the next 10 billion company or a billion companies to come online as Web3 companies. I do also buy some tokens for some projects that may make more sense to me, where I understand the mission, I understand the economics of it, I understand the community they're going after. And occasionally, on a passion, I'll invest in some NFTs. Pudgy Penguins is one that I got into a little bit earlier. Again, passion project, like art, I think of it as something that is where it could very quickly go to zero, and something that I buy because I think it's fun and cute. A lot less so for the investment, although they've actually done quite well.
Fantastic. Thank you, Lawrence. Jorge, please.
So, great question. Legal regulatory frameworks. I was able to participate and be part of the Miami-Dade County Cryptocurrency Task Force, where we help commissioners and majors of Miami-Dade County understand the technology and being able to utilize the best benefits, not only for the community, but also for the employees of the county. I was able to advise 4 presidencies in Latin America. And when it comes to legal regulatory frameworks, I think the most important part of this is also the attraction and retention of talent. So I think that in Asia, there's plenty of opportunity for legal regulatory frameworks that are working very well and very efficient. But it seems like the biggest opportunity is no-brainer Latin America, especially for investors in the US, if we want to attract and retain the best talent in the world and continue to do that. So investing in Latin America, it has been always a great investment for when it comes to Industry 4.0 or blockchain technology. So I'm bullish about that. And I think we're no longer in times of prohibition at all. I think that the governments are more open to this. I actually can release some alpha here. I hope, I don't know if I'm being recorded or not, but it feels like, I think that there's a very major protocol in charge and recently to publish the new CBDC for Brazil. So that's going to be that's going to be coming up in the news very soon. So it's very interesting.
Awesome. Thank you. All right, Raul.
Yep. So, I mean, both my co-panelists already covered a majority of it. I just have a little bit to add to it. Yes, when you start looking into it, let's say you want to get into it, you'll hear a lot of words. There's crypto, there's Bitcoin, then there's layer 1, which is Ethereum. There are a lot of other layer 1s, layer 2s, NFTs, DeFi, all of that stuff. For majority of the people who are here who have zero investment, I would say just think about Bitcoin. That's it. I usually, when I go to a lot of conferences, my only spiel is for people who are not invested, focus 0.25% of your portfolio in Bitcoin, and that's pretty much it. That's all I usually advise. So Bitcoin is a good start, and then let's say a few years down the line, you're comfortable with it, you become well versed with it, you like, okay, I want to increase my investment, you can always go about and either buy more Bitcoin or go into layer 1, layer 2, NFT, whatever you feel like. But if it's getting off zero, it's a famous saying in crypto, get off zero is the more important task. So what it means is if you have zero exposure, get off zero is just take 0.25% of your allocation, buy Bitcoin. Let's see where it goes. It goes to zero, fine, it's just 0.25. If it goes somewhere, who knows? And I'll give you just a quick example of it. So when I got, let's look at number because we are investing to make money. When I got into crypto, Bitcoin, 2017, Bitcoin was at roughly $2,000. It is 7 years later, it is right now $60,000. Mm-hmm. It's at a 30x. Most projections now that BlackRock, Fidelity, and all the top bankers have Bitcoin ETF, there are 11 ETFs right now. Their projections are that Bitcoin is probably going to $1 million, 20, 30, 35. So if you, let's say that's a rough 20x, if you put 0.25% of your portfolio, that takes you to 5%. Let's say your rest of your portfolio doubles by then, you still have 2.5% of Bitcoin in your portfolio. That's a good allocation to have. Bitcoin is considered right now a digital gold. That's what you would typically allocate your portfolio into gold. You're getting another exposure to a digital gold for a 0.25% on today's portfolio value. So that's my advice.
So, and Raul,
let me just add one thing that I think supports the point that Raul was just saying, just to get in the game. And since its inception, Bitcoin has had 1 year where it ended the year at a lower price than it started the year. Just one. And we've seen, who already mentioned how much it's increased over that time. So it's been a, smart investment over the last 10 plus years.
Yeah, and it's an interesting topic. I mean, we have some speakers that are consistent speakers up on our stage that are super anti, and I love getting into the debate about it. I'm biased because obviously I want it to win, right? And that's kind of the catch-22 about investing in cryptocurrency. Anybody that's invested in cryptocurrency obviously wants to speak good about it because the more people invest, and the higher their allocations go, right? So there's that contradiction, but at the same time, I don't think you just have to look at the history of Bitcoin. You can look at the history of how money changes. Can you guys kind of speak to that a little bit? And you have fund managers here that are managing over $1 billion in assets that won't go near it, that will tell you it's crazy.
If I can just add to that. So yes, I understand there's, as I said initially as well, there's a lot of anti-crypto, anti-Bitcoin, scam, all of that stuff. Hence, I'm very specifically saying a middle way or a mid-path could be 0.25%. There's nothing to lose in 0.25. Because we are in crypto, we believe in it, I believe in it, I give you a theory of how it can do a 20x. That will take care of it. I'll give you another...
But Raul, I want to say something. Let's play devil's advocate, right? But why, I mean, right? It's like, yeah, of course, you don't stay away from altcoins, stay away from anything that's not top 3, but people still argue against Bitcoin. Why? What's the logical look at, like, don't even touch Bitcoin? Devil's advocate perspective.
If I could make an analogy, it kind of reminds me of people that said the internet was just a fad.
Yeah, exactly.
Right? I mean, there are always those holdouts to new technology and new ways of doing business and new ways of thinking about the way in which we move information and the way in which we sort of make money. And so that kind of that cycle is not new. It's probably maybe a little bit more pronounced, but remember we had, I don't know, 5 years in the mid-90s where there were plenty of very well-respected researchers and pundits and capitalists that were just like, this internet thing is never going to amount to anything. It's a fad. It's something these kids are dealing with, and it's going to be gone. And they thought they were vindicated in 2000, and here we are, where I don't think any of us can live without the mobile internet in our wallets, much less at home. So.
Yeah.
And it's fine. Like if people are against it, that's totally okay. There are people who have publicly had stands against it. Best example is Larry Fink. He still comes out and say, yes, 2018, 19, I didn't get the story. 2021, 2022, I read the white paper, I got the story, and now 2024, BlackRock has EDF, one of the most successful EDF launches they had. It happens because, just remember, I just asked everybody to raise their hands if they are invested in Bitcoin. Imagine this panel was happening in 2014, and I'm like, how many of you, my question would have been, how many of you have heard of Bitcoin? I wouldn't have raised hand for sure. Probably there would have been 1 or 2 hands raised for the simple question of how many of you have heard of it. Look at where we are from a political standpoint. If 2016, both the political candidates, if you would have asked, what's your opinion on Bitcoin? And their answer would have been, what's Bitcoin? 2022, 2 candidates on both sides of the aisle, what's your opinion on Bitcoin? Yeah, we have heard of it. I don't know, no opinion. 2024, both the candidates, actually we had 3, 1 dropped off, 2 candidates from both sides of the aisle. 1 candidate went to a Bitcoin conference, has been talking about US should add Bitcoin to strategic reserve. The other candidate just came out 3 days ago saying, I'm going to make sure that there are pro policies for AI and blockchain. That's how far the journey has been from a 2016 to 2024, where you have presidential candidates talking about it, you have BlackRock, and both and they were anti-crypto or against crypto. So that's fine if people are saying we are anti-crypto. And here we are not trying to convince you. Take your time, take your years, that's okay. We are here just to plant that seed that there's this thing going around which is available for investment. You can take a small portfolio, allocate to it, and see where it goes.
Fantastic. I think diversification is the important part, and I think that was kind of the interesting thing when I would see family offices be against it, and then a year later, they would talk on stage about how they allocated 2 to 5% of their portfolio, and I was like, hey, last year we talked about it, and you kind of laughed at it, and it's like, well, my friend just made a 10x return, so I'm gonna put 2% at least, right? Because 10x on 2% is pretty good. But I want to know, is there any questions in the audience right now? Questions in the audience? I have a hand in the back. Fantastic. Charlie's coming over right now with a microphone. And please make sure it's a question. If you start pitching something, I'm going to interrupt you, all right?
No pitch today. How do you handle the thoughts around pump and dumps by whales in markets that just around the world? That's something that I've read some about, didn't really have a lot of clarity on it. How have y'all approached some of that volatility due to high rates of activity outside of regulated markets effectively?
I'd like to take on that. So the percentage of money laundering, or perhaps what you're referring to, these pump and dumps are very small for the utility and the amount of the volume that it's moved into the major cryptocurrencies as a utility and transactional wise. So I think that hundreds or thousands of those are going to disappear over the next 3 to 5 years. The legal regulatory frameworks are very clear on many things, from MiCA in the European Union to here in the United States. I'm actually very comfortable with the US speaking about blockchain and Web3 at last, because it's a very disruptive technology. And as leaders, I think that the US has time to review what's been happening in Japan, in Asia, in legal regulatory frameworks like MiCA in the European Union. All the consumers and the affected consumers in Japan from FTX were reimbursed and were being able to be protected by the government as well as here in the US are actually recently. So I'm very comfortable with sometimes the government, I'm not trying to say moving slow, but being very careful on where we promote the talent, the engineering, the innovation, and we're not limiting the entrepreneurs. So yeah.
Yeah, and I think that's a really great overview of just the importance of having a supportive regulatory regime, and also some of the kind of statistics to just contextualize. But I think just specific to what can you do about it. I come back and I feel like I'm a long time kind of sales and trading guy in the traditional finance world, so I tend to think about pinks and bullies again. You've got to educate yourself, and if you wouldn't invest in penny stocks on the cash equity side here in the U.S., you probably shouldn't be investing in new or long tail small projects in the digital asset side. The analogy is very similar. There's a lot of incentives for folks to not necessarily be fully transparent. I would encourage people, particularly those who aren't necessarily as familiar with the space, to start at the top. Raul said it. Just buy a little bit of Bitcoin. That's it. Just buy a little bit of Bitcoin, right? It's more than 50% of the total market cap of digital assets. It's still highly volatile, but it tracks more like gold these days. And start working your way down the sort of market cap stack to things that tend to start to become more volatile and a little bit less transparent. But you do got to do your research, understand what the project is about, understand what the economics are, understand the community, and there are ways to gauge signal on how competent or how realistic this project is. You can look at the community, how many developers are contributing, how big the community is, other areas like that. So, but you got to do your homework. And I would say if that is a big fear, just work up the chain. Like start at the top and work down, as opposed to starting at the tail end and working up to larger market cap instruments.
Do we have another question in the audience? Anybody else? Going once, going twice. Oh, we got one right here on the right, please. Charlie's coming over. Say your name, please, and if you can tell us where you're from as well, that'd be great.
Yeah, sure. My name is Paul Graham. Currently live in Austin, but moving to Nashville, so
all right.
Come on down. Question would be, what's in your crystal ball for election? Not saying sides, right, but curious of what either you found in previous years, right, especially if you've been in the game in a long time. Are you thinking it's going to be, morefold? Some of us might be more risk tolerant, so 2.5 is good to get in, but could be looking to maybe put in a little more. If your crystal ball is saying, it's going something. If your crystal ball is broken, I'm sorry, but thanks for being on the panel.
Raul?
Yep, I can take up that question because that's an active conversation in the crypto community where I'm mostly hanging out with is what's going to happen on election. It depends on what you're holding. So if, again, for this audience, let's stick to Bitcoin. Bitcoin doesn't have a CEO. It doesn't have a marketing team. I'm talking about Bitcoin. I'm asking you to buy Bitcoin. I don't get a single dollar because I'm not part of a marketing team. Somebody wrote a white paper in 2008, threw it out on the internet. 15 years later, we're sitting in a panel in a single family office talking about Bitcoin. Look at the journey it has taken. It won't matter what happens on the election. Yes, there could be some price volatility. The adoption curve, the network effects is on the move up. People like me are talking, going to different events, evangelizing it. The adoption curve is happening. We have ETFs being approved. Nation states, one country already made it as a legal tender. This country's president, one of the presidential candidate talking about strategic reserve. Every point is adding up where it's on the move up. And because it has a limited supply, the only way to offset that is prices to go up because there are people like me and a lot of people who believe in it and are gonna hodl it. So if you can ignore that November 4th and few days or few weeks of volatility, and if you look at the long-term trend, not just in terms of price, but in terms of the network effect, it's just zooming up. And I think that's what is making Fidelity, BlackRock, these kind of companies to project that 2030, 35, the price is probably going to $1 million. More than that, if you like Michael Saylor, he's going even further out, saying, I don't know, $20 million, $30 million a Bitcoin in 2040, 2045. But let's not go that far. Let's just stick to where the trend is. And I think it is agnostic of what happens on November 4th. That's my reading on it.
Yeah, I think the main realization too is that crypto is a global currency, right? So what happens in one election doesn't affect, in essence, even though it is the US election, we're still just waiting for another only 1% of the world population touches crypto right now, right? So election or not, there's just still too much space for growth.
I wanted to reinforce on what you said about network effect, which is a very technical and very interesting concept that we cannot miss. Has nothing to do with networking or scalability in companies. The network effect is a real thing that happens in the world of technology, and we cannot ignore it when it comes to having looking at the future of these technologies. So I just wanted to make a point on that, where the reason that I'm here as co-founder of BitBasel is also to pick your brain about movements around the world, like the creative tech movement, creative industries, art, music, fashion, film, design, bullish into utilizing these technologies, not only blockchain, but also artificial intelligence. We're also co-founders of the University of Florida's Blockchain Lab, which was created with a $5 million grant, where these young undergrad and graduate students are being hired by a large amount of companies in the enterprises like EA Sports and Disney, where they're already experimenting and already launching their own products onto these platforms. And when we see the future of blockchain is really the future of the new infrastructure of technology for us, when you have mesh architecture, which increases the level of security, including many things government-wise, or contracting with the government for traceability and transparency. The use cases are endless, but the network effect of some industries, we're just about to see that huge exponential growth on those network effects, like on the creative tech industries and major enterprises.
Excellent. Well, look, I have one more question. I'm going to just direct it to Lawrence for him to wrap up. But we only really talked about crypto, and there's so much more when it comes to digital assets that we can talk about. But the other thing, too, are the other industries that are affected by crypto, right? You can Coinbase, for example, which is the largest crypto exchanges, you can invest in public markets in their stock, right? For example. So what are other examples of that you can be, without having to invest directly in crypto, that are affected by crypto, like investing in exchanges, like investing in servers?
Yeah, I think you kind of hit it on the head. There's a bunch of of related industries. You've mentioned some of them. There are a number of public companies that are crypto affiliated, Coinbase being the sort of marquee one. Even a company like PayPal is investing a ton in their PayPal USD and like using that as a growth engine to cut out costs and also to reduce friction for merchants to effectuate payments. So, there's, as you mentioned, there's not quite as big as AI, but there's a bunch of data and mining related activity that requires a lot of power and generation. So I'd argue power and generation is also another area that sees some tailwinds with digital asset activities. And even some of our large financial institutions, JP Morgan and Onyx projects, and some tokenized real world asset projects.
Tokenization.
Or tokenization generally are really creating cost efficiencies that are driving growth in other areas far outside of what people would traditionally think of as crypto. So a lot of areas, again, I'd just say do the research and just get off the sidelines, get in the game.
Awesome. A big round of applause for our panelists on panel number 9. Thank you so much.
If you are a founder, raising capital, developing real estate, or you're an investor, would love for you to get involved in the Family Office Club. I've run this community for 18 years now. We've hosted 300 live events. We have 17 million social media group members and followers. We have the #1 YouTube channel on family offices. We have the #1 most popular podcast on family offices. You can learn more about us and our membership options at familyoffices.com. We have 30 in-person events planned in 2026 and another dozen events this year. Please go to familyoffices.com to learn more.